Let's talk about gold because its price has been on an absolutely wild ride lately. One minute it's smashing records, and the next it's in a total freefall. This isn't just about numbers on a screen, though. It's a really fascinating story about fear, confidence, and some massive global power shifts. So let's unpack what's really going on with the world's ultimate safe haven.
So the big question is, what is driving this roller coaster? Is it just a case of market jitters, or is there something much, much deeper happening here? Well, we're going to break down all the forces at play in this explainer. And just to give you a sense of the scale we're talking about, the price of gold recently hit an all-time record high. It soared past $5,500 an ounce. I mean, that is a truly historic peak. But then, bam! Almost overnight, it plummeted. The price dropped by more than 9% in a single day. That's the sharpest one-day fall since 1983. It was a shocking reversal that left a lot of investors just reeling.
And here's the crazy part. Even with that huge drop, the price of gold is still up about 75% compared to this time last year. So when you zoom out, the bigger picture isn't a collapse at all. It's a massive, sustained rally, just with some extreme turbulence along the way. Okay, so first things first. Let's start with that stomach-churning drop. To really get the whole story, we have to figure out what could cause such a violent U-turn. Well, analysts are basically pointing to a perfect storm. A huge factor was this renewed confidence in the U.S. economy, which, makes the U.S. dollar stronger. And since gold is priced in dollars, a stronger dollar actually makes gold more expensive for everyone else, and that can push demand down. You throw in some changes to trading rules and this general feeling that the price had just gone up way too fast, and you've got the perfect recipe for a major sell-off. This really shows a classic relationship in finance. The best way to think about it is like a seesaw. When investor confidence goes up, they have faith in the economy and the US dollar, the appeal of gold as a safe place to hide goes down. But when anxiety shoots up, investors flock to gold, and that pushes the price up. What we just saw was that seesaw tipping hard back towards confidence, even if it was just for a moment. This quote from Mark Matthews at Bank Julius Baer really gets at the psychology of the market. He said the price had gone parabolic, which means it was shooting almost straight up. And when an asset rises that fast, it gets really unstable. As soon as a few investors decided to cash out and take their profits, it triggered a chain reaction. It just snowballed into that massive drop. All right, so that explains the sudden fall, but that's only half the story, right? It doesn't explain why gold was at a record high in the first place. And to understand that, we need to look at the huge rally that came before it. This is all about one crucial concept, the safe haven. So what exactly is a safe haven asset? Well, it's basically a financial foxhole. It's a place investors put their money when the world feels chaotic and unpredictable. The goal isn't really to get rich quick, it's just to protect what you have when other investments, like stocks, seem super risky. And for centuries, gold has been the ultimate safe haven. This quote from Nicholas Frappel just nails it. Unlike a stock or a bond, gold isn't someone else's promise to pay you back. It has its own intrinsic value. And in a world that feels full of debt and uncertainty, that makes it an incredibly powerful tool to have in your corner. And let's be real, the world has felt pretty uncertain lately, right? The past year has basically been a checklist of geopolitical anxieties. We've seen unpredictable U.S. trade policies, these constant tariff negotiations, threats against European nations, and serious friction between major global powers. Every single one of these events was just another reason for investors to run for cover in gold. I love this quote from Emma Wall because it sums it all up so perfectly. When the world feels messy, gold shines. Its price basically becomes a barometer for how unstable everyone feels. The messier things get, the higher gold tends to climb. But there's another story here, an even bigger one, playing out underneath all these daily market swings. It's not just individual investors who are getting nervous, it's entire countries. And that brings us to the central banks.
Okay, so here's what's been happening. After Russia's US dollar reserves were frozen following the invasion of Ukraine, a huge light bulb went off for other nations. They suddenly realized that relying so heavily on the dollar made them really vulnerable to US policy. The result? Central banks all over the world, but especially China, started aggressively buying gold. They see it as a neutral asset that no single country can control.
And you gotta understand, this is not about market panic. This is a deliberate, long-term strategic shift. This steady, consistent buying from the world's most powerful financial institutions creates this massive demand for gold. It puts a solid floor under its price, no matter what nervous investors are doing from one day to the next. So we've got this short-term drop, a medium-term rally, and this deep, long-term trend. So what? What does it all mean? And maybe more importantly, why should you even care?
Well, to put it simply, the price of gold has become way more than just a number. You can think of it as a real-time indicator of global fear and uncertainty. When you see its price soaring, that's a sign that major investors, and now even entire nations, are getting seriously worried about the stability of the world's economic and political systems.
So to wrap this whole story up, that crazy drop we saw was really just a short-term correction, sparked by a brief moment of calm. That drop came right after a massive, record-breaking rally, which was fueled by investors running from a messy and unpredictable world. And holding it all up from below is that deep strategic shift by central banks, who are moving away from the dollar and towards gold as a truly neutral reserve. And all of this leaves us with one final, pretty important question to think about. With all the ongoing trade disputes, the geopolitical tensions, and this fundamental shift in how nations are choosing to store their wealth, in a world that just feels like it's getting messier and more fractured, is gold the only reliable anchor we have left?